So let's talk about SBF and FTX. Who is Sam Bankman-Fried? Can you tell the story from the beginning as you understand it?
Yeah, so Sam Bankman-Fried is a kid who grew up sort of from a position of huge privilege. Both his parents are lawyers. I believe both of them were from Harvard. He went to MIT, backing up a bit more, he went to like this top prep high school, then to MIT, then he went to Jane Street. And after that, started a trading firm in, I think, 2017 called Alameda Research with a few friends. Some of them were from Jane Street, some of them worked at Google. And they were sort of the smartest kids on the block, or that's what everyone thought. They made a lot of their money on something called the kimchi premium, or at least the story goes, which, just to explain that, the price of Bitcoin in Korea was substantially higher than in the rest of the world. And so you could arbitrage that by buying Bitcoin elsewhere and selling it on a Korean exchange. So they made their money early doing kind of smart trades like that. They flipped that into market making, which they were pretty early on that. Just providing liquidity to an exchange. And it's a strategy that is considered delta neutral, which means basically if you take kind of both sides of the trade and you're making a spread, like a fee on that, you make money whether it goes up or down. So in theory, there shouldn't be that much risk associated with it. So Alameda kind of blew up because they would offer these people, people who are giving out loans, they'd say, hey, we'll give you this really attractive rate of return. And we're doing strategies that seemingly are low risk. So we're a low risk bet. We're these smart kids from Jane Street, and you can kind of trust us to be this smarter than everyone else kind of thing. Around 2019, Sam started FTX, which is an exchange. Specifically, it specialized in derivatives. So like margins, kind of more sophisticated crypto products. And it got in with Binance early on. So Binance actually has a prior relationship to FTX, which we'll explore in a second, because they're going to play a role in FTX's collapse, actually. Binance is the number one crypto exchange, and they're led by, he's called CZ on Twitter. I don't want to butcher his full name, but really smart guy, has played his hand really well and built up a quite large exchange. And Binance was funding a bunch of different like startups. So they helped invest into FTX early on. They invested 100 million. So these guys were kind of like teammates early on, SBF and CZ. And FTX quickly grew. They got especially in 2020, 2021, they got a lot of endorsements. They got a lot of credibility in the space. And eventually FTX actually bought out Binance. They gave them $2 billion. So pretty good investment for CZ in a couple of years. And now lead that up to 2022. What happens? Luna collapse, Three Arrows Capital collapse, which, if you don't know, there's just these kind of cataclysmic events in crypto, led by some pretty risky behavior, whether Luna was a token that promised really attractive returns that were unsustainable ultimately, and it just kind of spiraled. It did what's called a stablecoin death spiral, which we can talk about if we need to.
Stablecoin death spiral. I can't wait till that actually enters the lexicon, like a Wikipedia page on it. Economic students are learning it in school.
Yes.
That's like a chapter in a book. Anyway, I mean, this is the reality of our world. This is a really big part of the economic system is cryptocurrency, and stablecoin is part of that.
Yeah, it's weird because on the one hand, cryptocurrency is supposed to somewhat simplify or add transparency to the financial markets. The idea is, for the first time, you don't have to wait for an SEC filing from some corporate business. You can look at what they're doing on chain, right? So that's good, because a lot of big financial problems are caused by lack of transparency and lack of understanding risk. But ironically, you get some people creating these arbitrarily complicated financial products like algorithmic stablecoins, which then introduce more risk and blow everything up. So anyways, Three Arrows Capital blew up. And all of a sudden, this crypto industry, which everyone thought was going to the moon, Bitcoin to 100,000, is in some trouble. And FTX seems like the only people who, besides like Binance, who's also really big and stable, and Coinbase, they seemed like they were doing fine. In fact, they were bailing out companies in the summer. I don't know if you remember that. SBF was likened to like Jamie Dimon, who's the CEO of Chase, who kind of was like, the buck stops here. I'm like the backstop, right? So SBF was supporting the industry. He was like the stable guy. So come to like around October and November, there's all this talk about regulation. Everything's been blowing up. SBF's leading the charge on regulation. And CZ, the CEO of Binance, gets word that maybe SBF is kind of like cutting him out or making regulation that would maybe impact his business. And he doesn't like that too much. They start kind of feuding a little bit on Twitter. So when it comes out, a CoinDesk report came out that FTX's balance sheet wasn't looking that good. Like it looked pretty weak. They had a lot of coins that in theory had value if you looked at their market price. But for a variety of reasons, if you tried to sell them, they'd collapse in value. So it's sort of like this thing, a house built on sand. And a friend of mine on Twitter, he goes by Dirty Bubble Media. He released a report, and he basically said, "I think these guys are insolvent." Well, CZ saw that, and he retweeted it and started adding fuel to the fire of like the speculation. Because up till this point, everyone thought FTX is super safe, super secure. There's no reason to not keep your money there. Tom Brady keeps his money there, whatever. And CZ kind of adds fuel to the fire by saying, not only am I retweeting this, adding kind of like validity to this speculation, but also I'm going to take the FTT that I got, which part of their balance sheet was this FTT token, which is FTX's like proprietary token. And Alameda and FTX controlled a lot of it. They were using this token to basically be a large amount of collateral for their whole balance sheet. So it accounted for this huge amount of their value. And the CEO of Binance had a huge chunk of it as well. And he said, I'm going to sell all of it. And the fuel that introduced to the market is if he sells all this FTT, and this FTT is underwriting a lot of the value of FTX.
Does FTT almost approximate like similar things if you were to buy a stock in a public company? Is that kind of like a stock in FTX?
It sort of was this proxy because what FTX was committed to doing was sort of like buying back FTT tokens. They would do this thing called the buy and burn. I think there was some amount of sharing in the revenue fees of FTX. It was kind of this convoluted thing. In my opinion, the exact value of FTT was speculative from the beginning. Mm-hmm. And it was clear that it was very tied to the performance of FTX, which is important because we'll get to later, FTX sort of built their whole scaffold on FTT, which meant that this scaffold was very wobbly because if FTX loses a little bit of confidence, then your value goes down. When your value goes down, you lose more confidence and this goes down. So it was kind of like this flywheel that when it was going well, you got huge amounts of growth. When it's going bad, you get a exchange death spiral, so to speak.
Actually, this structure, it's a pretty non-standard structure. Did the architects of its initial design anticipate the wobbliness of the whole system? So putting fraud and all those things that happened later aside, do you think it was difficult to anticipate this kind of FTT, FTX, Alameda Research weird dynamic?
No, because I think sophisticated traders always think in terms of diversification and correlation. So if you're the way to think about risk in investing is like, if I invest in you, Lex Fridman, and then I also invest in some product you produce, the performance of those two things will be pretty correlated. Yes. So whether I invest in you or I invest in this product that you like are completely behind, I'm not de-risking. I'm basically counting all on you doing well, right? Mm-hmm. And if you do bad, my investments do very bad. So if I'm trying to build a stable thing, I shouldn't put all my eggs in the Lex Fridman basket unless I'm positive that you're going to do well, right? And these people...
As your financial advisor, I would definitely recommend you do not put all your eggs in this basket.
Right. And so you can think about it like, if I know that, these people were trained to think like this. And so the idea that you could start this exchange, you're worth billions of dollars, and you underwrite your whole system by putting most of it on your own token is insane. And what's crazy is we'll later find out that they were basically taking customer assets, which were real things like Bitcoin and Ethereum with risks that were not so correlated to FTX, and they were swapping them out. They were using to go basically gamble those and putting FTT in its place as, quote, value. So they were increasing the risk of the system in order to bet big. with the idea that if they bet big and won, we'd all be singing their praises. If they bet big and lost, I don't know if they had a plan, but I think they were being extremely risky, and there's no way to avoid their knowledge of that.
So when you say customer assets, is I come to this crypto exchange, I have Bitcoin or some other cryptocurrency, and this is a thing that has pretty stable value over time. I mean,
Yeah,
as crypto, relatively so,
crypto.
and I'm going to store it on this crypto exchange, and that's the whole point. This is so this thing, to the degree that crypto holds value, is supposed to continue holding value. There's not supposed to be an extra risk inserted into the thing.
Right. And FTX was pretty clear from the beginning that they wouldn't invest your assets in anything else. They wouldn't do anything else with it. They wouldn't trade it. That's what made FTX such like a horror story for investor confidence, is basically they made every signal that they would not do anything nefarious with your tokens. They would just put them to the side, put them in a separate account that they don't have access to, and they just kind of wait there until the day that you're ready to withdraw them. That's explicitly what they told their customers. So going back to the story a little bit, CZ then says, hey, I'm selling this token that underwrites the value of FTX. There's a total panic. SBF during this time says several lies, such as FTX assets are fine. We have enough money to cover all withdrawals. And a day later, he basically admits that that wasn't the case. They don't have the money. They're shutting down. And then a few days later after that, they declared bankruptcy. I should be clear, there's Alameda Research, FTX International, and FTX US, which is the US side of things. These are three different entities. All of them are in bankruptcy. And it's not clear to the extent that they were commingling funds, but it's clear that they were commingling funds to some extent. So they kind of were taking from each other. And that is where the fraud happens, right? Because if going back to our earlier analogy, if you're supposed to set funds aside and I find out you were using it to go make all these arbitrage trades or do market making or all these activities you were known for your like hedge fund trading firm thing, that's a huge problem because he basically lied about this. And especially when he's saying explicitly that we have these things, we have these funds, and these things turn out to be lies. Well, again, the question of fraud comes in, and it's just like, there's no way he didn't know. So the obvious question might be, well, why isn't he locked up? Why is he running around? And it's because really his story is that he didn't know any of it. He found out that they had, to steelman his position, he would say he was totally disconnected from what Alameda was doing. He had no idea that they had such a large margin position, that they had an accounting quirk, and that accounting quirk hit $8 billion from his view. And so when he was saying that they had money to cover it, he was saying that truthfully to the best of his ability. And he just was so distracted at the time that he made a series of increasingly embarrassing mistakes. And now he owes it to the people to right those wrongs by publicly making this huge apology tour. So you might have seen him he's been talking to nearly everyone about basically how he's just didn't know what he's doing. He's the stupidest man alive.
So what are some interesting things you've learned from those interviews?
I think I've appreciated why you don't talk in that position. Most people wouldn't talk. Most people would listen to their legal counsel and not talk. I do not think any lawyer worth their salt would tell him to talk, because right now, I think the danger of what he's doing is he's locking himself into a story of how things happened. And I don't think that story is going to hold up in the coming months, because I think it's impossible, from the insider conversations I've had with Alameda Research employees, with FTX employees, it's impossible to square what they are telling me with no incentive to lie with what SBF is telling me with every incentive to lie, which is fundamentally that he didn't know they were commingling funds. He didn't know they were gambling with customer money. And it was basically this huge mistake. And it's Alameda's fault, but he wasn't involved in Alameda, a company he owned.